The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
There are a couple of banks on the growth and income list this time around, and who better to tell us about them than the editor of Zacks Income Investor Service, Ryan McQueeney. So, JPMorgan Chase.
Yeah, we'll start there. Getting a little bit ahead of myself because I'm raring to go for earnings season.
Yeah.
JPMorgan among the big mega banks that report on that first Friday of the earnings season and really kick things off for us. Kick things off for the financial sector, which goes first, and then the rest of the market follows. So I'm raring to go a little bit. I'm jumping ahead a week. That Friday where things get started is actually next Friday.
It's the 12th of October. Right?
Yes. Spoiler alert, I'll probably come and do another one of the big banks next week as well.
Okay.
But just, because we can only cover a few here,
Yeah.
I wanted to do JP Morgan this week, and I wanted to focus on that soon-to-be reported quarter. So if we could look here at the estimates for the period, it's actually really not solid earnings estimate revision trend. Definitely not what we're looking for ahead of a report. So we're still looking for earnings growth of nearly 28%, which makes sense. We're going to see a lot of earnings growth this season from the banks, from the financial sector, rising interest rates. That makes sense. That being said, 4 negative revisions within the last 30 days, 5 within the last 60 days. That has brought the Zacks consensus down by 3 cents within the last 60 days. Heading into the report, that is not the trend we like to see at all. I want to highlight as well the most accurate estimate versus the Zacks consensus. So the most accurate estimate on our site is a way to display just the most recent estimates. So whereas the Zacks consensus is a consensus of every estimate that has come in, the most accurate would be a read of estimates that have come in within the last 30 days.
Okay.
The thought there is that especially right before an earnings report, an analyst who publishes a estimate 2 weeks out will know more about that quarter than 2 months ago, 3 months ago. So that most accurate estimate for JPMorgan right now is actually 3 cents lower than the consensus, which gives it a negative earnings ESP. Again, the total opposite of the trend that we want to see ahead of a report. However, I will say this much. JPMorgan has a pretty solid earnings season track record, especially recently. Yes, the big banks have kind of been ho-hum all year, struggled to gain momentum with the yield curve flattening out, obviously creating headwinds for the whole sector. But this is actually a look back to just 2016. Typically, this is a 5-year view on the price consensus and EPS surprise chart. I wanted to just look a little bit closer. As we can see, has not missed estimates within that time, has been able to consistently have its earnings consensuses go higher, which is a combination of surprising on earnings, but then also inspiring positive earnings estimate revisions. So that obviously has been, as you can see from the chart, mixed reactions to those reports. These banks are not the type of stocks that are going to soar or fall off a cliff really after an earnings report. So I point to those negative trends ahead of the report, and then I leave you with the knowledge that JPMorgan is actually a pretty consistent earnings performer. So,
the stock has been outperforming the industry over the past 3 months.
Like I said, it's kind of been a ho-hum in these big banks this year, but JPMorgan has been the leader.
Yeah.
And bringing it back to the income conversation, about a 3% dividend yield right now. So.
Oh, okay. And don't forget, too, if you read Shiraz, our research director's commentaries lately, we're in a period of earnings growth deceleration.
Yeah.
Maybe not steep deceleration, but it is there. So maybe not such a red flag for this particular company. BB&T Corporation, another bank.
Yeah, so while on the topic of the banks, I was kind of just exploring our major banking industry a little bit, and I noticed something interesting. Again, I'm going to keep hammering this point home a little bit, but it's just been a weird, sluggish year for the bank stocks. You'd think we have this earnings growth catalyst that should be propelling these stocks higher. Other headwinds have really kept those gains at bay. Right now, in the major banking industry on Zacks.com, we have one buy rank stock, and that is BB&T. It's a Zacks Rank #2 buy right now. As we can see, pretty good earnings estimate revision trend. It's not unbelievably fantastic. That's probably the difference between it being a #2 and a #1. Earnings growth, it's funny that the earnings growth rate there for the soon-to-be reported quarter is basically exactly what we're looking for JPMorgan. The story for the full year all the way up to 43% growth on the bottom line. That's expected to continue into the next year. And then, yeah, with an eye forward, no negative revisions for the upcoming fiscal year 2019. So that's certainly something we like to see, especially as growth starts to decelerate a little bit. The fact that analysts are already getting a little bit more optimistic about the upcoming period makes me feel more positive. That being said, I do want to acknowledge that it has been a rocky up and down year for the shares. As we can see, this is a year-to-date look, or excuse me, this is a one-year look. Let me give you the year-to-date look here. This is the year-to-date look, even more up and down. Basically, every time this thing looks like it's ready to rally, it pulls back. So struggled to really generate any momentum in either direction, which in earnings season is going to lead to a lot of uncertainty. We've seen it come down and get to this year-to-date low at the beginning of October, and it bounced off of that low, which is encouraging as we head closer to the report. And I'll note as well that at these price levels, the stock is trading at just 13 times forward earnings, so it's almost a little bit of a value play as well.
All right, do you own either one?
I do not, and we have neither in the income investor portfolio right now.
All right, thanks for that. Don't forget, always more stock information on our website, Zacks.com. Get over to the homepage and start checking it all out. Also, don't forget, Ryan's podcast, his weekly podcast, Tech Talk Tuesdays. That's on the podcast page of Zacks.com. Go down to the bottom of the homepage, look for the word podcast, and click on it. It'll take you to that page. And also, Ryan's live Monday through Thursday streaming video program, Free Lunch, that you can catch up with on most major streaming platforms. All right, got all that taken care of. With Ryan, I'm Terry Ruffalo.